Good morning, it's Monday the 7th of November and welcome to Atlantic Capital Markets' regular roundup of the key economic highlights coming up over the coming week. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So let's get straight to it. So the economic numbers being issued this week start today with the release of the Australian consumer confidence figures and the German industrial production numbers. On Tuesday, we'll get a flavour of how consumers are feeling in the Eurozone as it releases its latest retail sales figures, and that's something we'll discuss straight after this. Also on Tuesday, we'll get the latest CPIs from China. On Thursday, all eyes will be on the US as they release their latest CPI inflation figures. And again, we'll be giving our thoughts on this afterwards. And on Friday, the latest GDP numbers are released here in the UK, and again, we'll give our own thoughts on these towards the end of today's video. Also on Friday, we'll get the latest CPIs from Germany and the Michigan confidence figures in the US. And the companies that we'll hear trading updates from this week start today with Lyft and Activation Blizzard. On Tuesday, we'll get full-year results from AB Foods and likewise Q4s from Walt Disney, and we'll discuss both of these in more detail afterwards. Also on Tuesday, we'll hear from AMC Entertainment and Persimmon. On Wednesday, Marks & Spencer release half-yearlies, and ITV and electric car maker Rivian release their third quarter results. We'll give our thoughts on all of these three afterwards. Thursday also sees results from Aviva, Beyond Meat, Flutter Entertainment and Roblox. On Thursday, we'll hear from AstraZeneca, B&M European Value Retail, NIO, Tate & Lyle and WH Smiths. And finally on Friday, we'll hear from Polestar and SoftBank. Well, last week saw three major central bank meetings, and all three rate hikes were expected, with the Reserve Bank of Australia hiking by 25 basis points and expected to hike yet further. The Fed raised rates by 75 basis points and warned that the terminal rate was likely to be higher than expected. And the Bank of England hiked also by 75 basis points, warning that peak inflation was unlikely to rise to the level the market expected. Well, this week the economic calendar is much quieter, so investors are likely to continue digesting the fallout from the central bank's bonanza. Earnings continue to come through at a rapid pace as well this week. So let's take a look at this week's bigger stories in more detail. Well, on Tuesday, the Eurozone releases its latest retail sales figures. Well, retail sales fell 0.3% month-on-month in August and expected to fall a further 0.4% month-on-month in September. Falling sales point to a weakness in consumer demand as the economy heads towards recession. Despite a positive surprise for Eurozone GDP in Q3, with inflation at 10% and proving to be stickier than expected, cracks in the Eurozone economy are starting to show. And consumer confidence is, of course, near historical lows. So as a result, do keep an eye this week on the Euro and the DAX. Well, Primark owner AB Foods has already said that it will report a significant increase in adjusted operating profit and earnings per share when it posts full-year results again on Tuesday. And that's thanks mainly to the recovery in Primark, its clothing business, and a resilient performance from the grocery business. Primark has seen a 40% rise in annual sales to £7.7 billion after being hit by COVID lockdowns. Meanwhile, group-wide revenue is expected to have risen 20% to £16.7 billion. Looking ahead, the firm has already said that it expects to see another year of solid growth. The food business is likely to remain resilient, and attention will be on Primark as budget retailers have fared better than their more expensive peers. That's a trend that's likely to continue as the cost of living crisis deepens. Well, also on Tuesday, Walt Disney are due to report their final quarter results. This comes as the share price trades down 35% year to date at a two-year low. Expectations are for Disney to report a 15% year-on-year rise in revenue to $21.3 billion and adjusted earnings per share forecast to grow 38% to 51 cents. The solid growth in revenue is expected to be driven by the theme parks and experiences business, which is set to see revenues rise 39%, as demand has held up despite economic concerns and, of course, a strong dollar. The streaming business has performed well, with subscribers being added at a rapid rate. Disney could once again overtake Netflix with subscriber numbers, as it briefly did so earlier in the year. And finally, on Tuesday, US citizens will hit the polls to vote for a new Congress. Voting takes place at a time when inflation remains persistently high and household incomes are squeezed. The latest opinion polls suggest that the Republicans could do well at the expense of the Democrats and win back the House, which could set the scene for 2 years of political deadlock. Historically, equity markets actually quite like a divided House, which tends to mean sweeping changes and large-scale meddling are unlikely. Marks & Spencer is set to release half-year results on Wednesday at a time when the share price is down some 50% year-to-date. Investors are pricing in a severe slowdown in consumer spending. Expectations are for revenue before adjusted items will rise 4.6% to £5.34 billion. Breaking this down further, food sales, which include those through Ocado, are expected to rise 4.5%, while clothing and home sales are expected to rise an impressive 7.3%. That's despite tough comparisons from last year, as M&S continues to reap the benefits of the transformation by ex-CEO Steve Rowe, who stepped down earlier this year. Adjusted pre-tax profit is expected to fall 13.5% to £534 million, as rising costs take their toll. Wednesday also sees third quarter results from television company ITV. Well, ITV's share price has traded under pressure as investors worry about advertising revenue, as well as its streaming strategy. After total advertising revenue rose 5% in the first half of the year, it's expected to have deteriorated in Q3. However, later this month, the World Cup in Qatar could help a rebound in Q4 and lift the share price, which currently trades near a 2-year low. And finally, on Wednesday, Q3 results are also due from electric car maker Rivian. Well, the EV sector has struggled in the face of supply chain disruptions and inflation-based troubles, making it a challenging year for firms across the industry. Rivian is no different and struggled to ramp up production after its factory opened last year. Rivian has already reported production of 7,363 vehicles during the third quarter and delivered 6,500. Rivian is targeting 25,000 cars in the first full year of production, and this means that at least 10,500, in fact 10,683 to be precise, more vehicles need to be made by the end of the year, which could be achievable. Investors will be watching for a reiteration of that 25,000 target. Wall Street expects revenues of $551.6 million and adjusted EBITDA of $1.4 billion. On Thursday, the US reports its latest CPI inflation figures. Well, headline CPI ticked lower in September to 8.2% from 8.3% in August and down from the 9.1% peak. Inflation is expected to cool very slightly to 8.1% year-on-year in October. While headline inflation is cooling, core inflation, considered more stable, continues to rise from 6.6% year-on-year in September to 6.9% forecast in October. Hotter core inflation supports the Fed's belief that interest rates may need to rise higher than initially projected. So as a result, do keep an eye on the US dollar and US indices this week. And finally, on Friday, here in the UK, the figures for the year's third quarter GDP are due for release. As the cost of living crisis intensifies, consumer confidence sits at an almost record low. And as shoppers rein in their spending, a recession seems impossible to avoid. In the first look at how the UK economy performed in the July to September quarter, consensus estimates are for a contraction of 0.5% quarter-on-quarter, after recording a growth of 0.2% in Q2. And despite weak economic growth, the Bank of England hiked rates by 75 basis points as the central bank battles with persistently high inflation. So as a result, of course, do keep an eye on the pound and the FTSE. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from Whitbread, Shell, BP, Sainsbury and Airtel Africa. And in the FTSE 250, we'll hear from Dunelm, Bailey Gifford, Japan Trust, Greencoat, Contour Global and Schroeder Oriental Income. So there you have it, a slightly less seismic week in terms of macro events, but nonetheless an important one with several indicators and company results being released that will give us at least a flavour of just how the common person's faring. in this recessionary environment. Well, at least our sorry platform of politicians seem to have calmed down a bit this week, so maybe a period of relative stability and predictability. Maybe just the tonic the markets need as they try to navigate their way back to growth again. As one serving government MP disappears into the Australian jungle on a well-paid jolly, maybe they could find space for the whole lot of them for several months. I dare say a whip round to fund the plane tickets wouldn't take that long. Well, whichever way it goes, don't forget we're always here at Atlantic Capital Markets, making sure our clients navigate their best way towards growth. So, as always, thanks for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and, of course, our opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.